All right, good night again, Fishing for Pips team. Before I get into the daily review, I would like to share like a general approach of how you should go about doing your trading. So you should have a trading plan. That's the first step. The trading plan would give you a overall idea of what you're looking for. So there are several ways that you could trade, and you could develop your trading plan to suit your lifestyle. Personally, I prefer to trade the New York session, and my ideal setup is the type 1 setup, type 1 multi-session. We know our entry triggers for buy and sell. For the sell, it's railroad tracks, heart of wood, evening star, shift candle. For the buy setup, it's similar except you have the morning star. Right, so as a trader, you should have your trading plan, and you should immediately know, even before you take a trade, you know what you're looking for. It removes a lot of your thinking when you're on the chart, because trading in itself has a lot of emotions attached to it. And if you're using up your brain power trying to figure out what you're going to do, there's a lot of uncertainty. It's going to weigh more on you as well. So it's good for you to come prepared, have your plan, and then just go through and see if you could identify what's within your plan. And then you trade. It simplifies your process. The next thing is risk management. You should have your risk management in play. So you're coming on the chart, you already know what is acceptable to you. So you're not going to come in and lose 10% of your account in one trade, and you know that you're not comfortable with losing that amount of money, because it's going to leave you not feeling good if you end in a loss for the day. There are days where you're going to end in losses. There might even be weeks, if you're not that good, that you will end in losses, or maybe even a month you might end in loss. So depending on where you are, you should know what type of risk management to apply. Right, so here's my system: 0.3% per position, daily 1%. So this is how I control my losses. So there is never a case where I took a bad trade, I had a bad day, a bad week, or a bad month. It does not affect me because I'm okay with my risk benchmarks, right? I know when to stop trading. You should never have like, I'm going for $100 a week, because you may not get all your opportunities within 1 week. But your profit target will be based on your risk management and identifying your ideal setup. So notice how all three of these things come together, right? You have your ideal setup, you're managing your risk, and then you're making profit based on when a good opportunity presents itself within proper risk management. So a good opportunity presents itself, great. You manage your risk properly, you took 0.3 on that position, it moved in your favor, 1 to 2 risk to reward, you make a 0.6% on that position. That's a good day. You could stop trading there. Or you could decide to take another trade if you have a good setup and it's still within your timings. So this removes a lot of the thinking and panicking. You don't have to take a position on a trade that you're not sure about. When you get stopped out, you're trying to take it in the other direction. You remove all of that from the picture. You wait, you see a good setup, you take it. You don't see a good setup, you don't trade. Come back tomorrow, repeat the process. So it becomes very routine. Then you document what you're doing. Everybody should already know how you trade. If there's a specific thing that you're looking for, you already know this is what I'm looking for. Most persons would already know that this is what you're looking for, because every time you trade, or most times you trade, they see that this is what you're trading, right? So you should have like a list. It doesn't have to be as lengthy as mine. I have 7 here, but I believe this is sufficient. So Asian session accumulation, first leg London, second leg New York, etc. You could see it there, right? And then you journal it. Whether you are profitable or whether you sustain the loss, you make note of it. All right. So have a system like that for yourself in place. And next thing is to have your risk management already documented somewhere so you don't have to do a lot of calculating. So let's say you have a $20,000 account, right? Your risk to reward is 2 to 1. You could see the 0.3 here and the 0.6, similar to what we have in a trading plan. Just as an example, it doesn't have to be the exact thing. You could configure it the way you're comfortable with, right? So 0.3 risk, 0.6 reward. The stop loss and take profit is based on the volatility. So gold, let's do an example. Gold, for example, typically moves 309 pips per day on average. It could be more or less, but it's somewhere within our range. So reasonable stop loss would be like 47 pips. Reasonable take profit would be like 93 pips. It's going to be different for different assets because there is different volatility across the different assets. Right? But with a setup like this, you could manage your risk appropriately by risking the same amount of money on every trade, regardless of which pair you're trading. And you could go for the same reward based on your 2 to 1 risk to reward. You will already know what is your lot size. So let's say you're trading and a candle just closes. You don't now have to try and calculate what is the lot size I have to take before I enter this trade. You would already know. I need to take a 0.13. That's going to give me a $60 risk. You plug that in, stop loss needs to be 47 pips up, take profit 93 pips down. You measure that, plug it in. Let me show you an example of how you would measure that in. So for gold, we're talking about gold. Let's say we're trying to take a sell on gold. There's not a good setup on gold, so let's not do gold. Euro USD. So we want to take a setup on Euro USD. Where is our Euro USD? Euro NZD, Euro USD. So acceptable risk on Euro USD would be 11 pips and 22 pips. $11 pips, 22 pips. So this here would have been acceptable risk on Euro USD. So if you have a setup like that and you're looking at the chart, is this something that you should engage? No, unless you reduce your lot size. If you're going to increase your stop loss and increase your take profit, you would have to adjust your lot size. You could no longer trade the 0.55. You could trade like 0.4, right? Because you're extending your stop loss. So your risk is going to go up. So your risk is going to go up, reduce your lot size. And then yes, you could take the trade. Right? So you're managing your risk for every trade that you're taking and you're doing it in advance. So you have a quick way of getting these things while you're implementing your trades during the day. Right? So have your trading plan, do your journaling, know what you're looking for, manage your risk appropriately, have a system in place to get these figures very quickly. So you don't have to guess. You have an idea of how the pair moves. You know, it's news, it might be moving a bit more. You make your adjustments as you go. Here is the news that we had today, 8:30, Euro news. Right, so this is important as well. I don't have that documented here, but check the news. So let's do the recap now. I've been seeing a lot of this type of setup recently, at least the ones that I've been trading. I've been identifying this a lot. So this here is what is referred to as the Forex master pattern. You have a Asian accumulation. That's a contraction. This is the contraction phase. This is the expansion phase. And then this is the trend phase. Right? And notice how the three sessions show clearly their purposes. The Asian session is to accumulate, build up contracts. London session, they expand the market, induce traders to go the wrong direction. And then New York session, they make their intended move. Right, and they fully capitalize on the news to increase the volatility in the market and move the market really fast and aggressive in this direction. Right, let's look at it in terms of patterns, timings, and entry triggers. So we have our tight Asian, then we have a type 1. Right, this is a type 1. There isn't an M, but it's a type 1. So patterns, timings, it's not really an M.
Night, what's up? Hilton, you hear me?
Loud and clear.
I was saying something else, something wrong with my mic. Yeah, man. Blessed night, everybody. How you guys doing? Hope you guys had a great trading day. Nice. So we want to look at the characteristics of this trade, Hilton. I want you to break down the characteristics of this trade. If it's one of our setups, you can stay on the 15. So I like what you identified there, and you can see how the three sessions actually work. You know, there was a high and a low set in Asian. There was a low set in London, a high set in New York, and then the trend down. All right, so very simple. It's the pass on the both side of the Asian. The one that spiked to the bottom, the one that came up on top. But if we could look at the characteristics of when they came out the Asian and they make that stop on down, right? That entice move, that induce move downwards in the London. You can see if we can stop that run down there. All right, it's all about where price open and price close. Nice. Could you see 3 pushes going up into the Asian? I mean, up into the New York from the low of London. Can you see 3 pushes there?
Yes. Yeah. You can see 3 pushes.
Yep.
Yeah, as usual.
There's one push. There's one push followed by sideways movement. Another push followed by a pullback. Another push which went straight into the news in the New York session. There's an evening star that showed up to the top there on the smaller time, on the 5-minute time frame. Around that time, you would have seen an earlier signal where you could have get a lower risk and getting at a more discounted price. All right, but on the 15, you can see an evening star up there. All right, that bullish candle followed by those 2 bearish candles. Shady reverse. Okay, so the characteristics of this trade in line with your directional bias. Whether you see it as the Forex master pattern of the trend phase, right? The contraction, the expansion, and then the trend phase, or you see it as the 1, 2, 3 push. Nice. What you need to pay attention to is look at how it's set up, look at the timing, and look at the signal. Look at the characteristics of how they work below the Asian range, come straight up above the Asian range, which also took out previous day high. Nice. If you also look to the right, there's a quarterly level. There's a quarterly level there. Characteristics of a good trade. These things can be combined. You also have your DXY confluence where you can see it was bullish as I showed you guys before. So when all these things align, you could, I like that structure Hilton have there within his plan, his journal, how he sets the stuff up there. That's really good. I mean, he have it more, structured better than mine, right? And that is good. I like to see things that are a little better than mine. I probably could learn from that and take some of that too. All right. I mean, I have my things to suit me and how I like it, but that I love that. I believe you all on this call could watch and learn and take something from that, because this is a business. And when you're doing a business, that's how you have your stuff in a game. Y'all understand what I'm saying?
Yeah.
Yes, sir.
Yeah, Jojo.
All right,
Yes.
so I know a lot of you saying, yeah, Jojo don't have that right now. So don't call no name, don't whistle. Don't want to know who you are. Go and do your work. Don't let us call past you just like that. All right. But the characteristics of a good trade. So watch, identify, observe, run surveillance. You're an investigator on your charts. You're a police on your charts. Look, watch, understand the high quality setups. The news doesn't matter. You know the market direction. Have your confluences, then you have the characteristics of a trade. This is our 1, 2, 3 push. This is our correction type of setup. Remember the correction setup that I make you guys, illustrated? London crazy low, 1, 2, 3 push up, going into New York session. And what timing is that actually, Hilton? Is that 9:15 around there? What timing is that?
But somewhere around there, yeah. 8,
Alright.
9.
When the evening start close, it was somewhere around equity hour. So that is exactly. Yeah, somewhere around there. A little before.
8:40.
Okay. Right, because news was a little earlier. So definitely you would have to engage earlier, because the news would have, make the move, spike the move. So that's really good. So what I want you guys to pay attention, right? Follow what Hilton showed in the structures there too. Take inventory, take notes, mark your stuff down, have your specific thing that you want to react to, and do this week in, week out without fail. All right, cut out all the noise from your head, follow the education. I continue.
Excuse me, I had a quick question. Can I ask a question? Jojo, you mentioned something about quarter theory. Can you
Yeah.
tell me where you see that quarter theory?
You're
Where
gonna
you see-
learn. You're gonna learn about it.
Okay,
It's where we
Thank
deal
you.
with some numbers: 75, 25, 50s, double zeros. All right, so you're gonna learn about it. So let's don't get into that too much right now, right? But there is a qualitative level writing. All right.
okay,
Where
thank you.
see 175.50, where you see it hit up an area there. So that's also where a sign of where the market's going to reverse. All right. So remember, it's a numbers game also. And what they will do is they will start at certain prices, they will go to certain prices, and then they will reverse at certain prices. Nice. So if they invest the last open price on the previous day was around a certain number, their plan is to run above that open price, make a new high with that price, and then turn it around. That's where they're taking their position. So when we sell there, that's how we trade in line with them. So you're gonna learn some more about that going down. Right, we're gonna catch up on some classes. Andre will come and drop the quarterly levels for you guys to implement with this method and system. And it's just a confluence of where the reverse can take place. I could see it without the lines, because wherever the turn happen, the line will be, right? But if you could put it on the charts and you can actually watch in that area, you will have some good confluence of, where to set out to look for it. All right.
Okay.
So go ahead, brother.
Good. The the quarter level theory is a whole separate topic. I don't think we could do it on half of the call. We might gotta take a whole call. But that's Andre's thing that he's focused on. Like for me, I'm focused on my type 1. I try to keep it very simple. Like somebody comes on to my class, they'd be like, that's too simple. We need to know additional stuff. But the truth is, you don't really need to complicate it. Keep it simple, make it work for you, and ensure you test it. Do your demoing, do your back testing, journaling, do your live with your small account, and you're gonna see that it works. But it's not gonna work
Correct.
immediately. It's gonna work over a period of time,
Correct, correct. Keep it simple.
right? Let me see. So this is, let me give you now a general approach of how I look at the charts. And you're gonna notice it's similar to anybody in the group who is successful, because Jojo is the head of the entire group, right? So he is the leaders for all the leaders. So what he is teaching everybody would align with. So you would notice that everybody who is presenting something to you, they're going to have a very similar structure, right? So what are the things that you would find in common? We identify particular peers that we could see our levels and cycles on. I do not have the exact same bias as everybody in the group, and that's fine. But for most of the things that I have, it would align with what everybody else has, right? So my approach is to have my peers at the top, the ones that I have a directional bias on, I have them pulled all the way to the top. So USD CAD, gold, Euro USD, Euro CHF, GN, right? So when I come to the chart, these are the ones that I look at first. And if there isn't anything there for these other pairs, I would have to put in work. And I am going to admit that I am a lazy person. So I try not to go and do any, and also trying to do makeshift work at the beginning of your trading day, it's not advisable. Work with something that you're already comfortable with. So generally how my day goes is I check, I see if there isn't anything on a pair that I have an established bias on, I would just get back to my 9 to 5 and focus on what I'm doing. Right. So USD CAD, for example, this is what I have for USD CAD. I was hoping to catch a swing on this, but I didn't engage this. If you look back on my 15-minute, I was actually tracking this. I believe it was like 3 weeks ago. I was hoping to take an entry for a sell. I had actually marked it up somewhere. There it is. So from this point here is where I did my analysis. And I was saying that, okay, so I'm looking for this now to make a second push and then continue down. So this is what I was looking for from this point up here. And I was looking for it to continue down. It did give the moves, but I didn't engage it yet because I didn't get a setup that I preferred during the day. There were setups, but not ones that I would prefer. Right, and even though I didn't get the ideal thing that I was looking for, the pair did move, and does that affect me? No, it doesn't. Opportunities present themselves continuously in the markets. Like if you do your back testing, you do your demoing, you do your journaling, you do your small account front testing, you will see that there is no need to panic. There is no need to hurry up. The market is not running anywhere. They're doing almost the same things all the time. So there is no need to rush. Exercise your patience, you're gonna get your opportunities. One pair that I had a really nice move on was Euro CHF, right? So this is what I had identified: peak low, level 1 accumulate, level 2 pull back, level 3 peak high. I actually caught this move from here all the way down, and then I closed here. I didn't trade this back up because I was actually looking for this to make a second drop and a third drop. That didn't play out though, but I did capitalize on this. Right, so look for your setups, be patient. You will get really amazing opportunities. Don't try to trade what Don't try to follow what anybody else has that you don't understand. If they have something and you understand what they're presenting and it aligns with what you understand as well, then sure, go ahead. But if you don't understand what they're doing and you're just, it might cause conflicting beliefs in your mind, right? So work with what you understand. If you're not as advanced as somebody is yet, or if you have a different style that you're applying, I don't mean like a different trading methodology, but like, let's say you're looking for type 3s instead of type 1s, then follow your way. If you're trading London session instead of New York session, do what works for you. One thing is not going to work for everybody. Everybody has their own different needs, but the key thing is that you have a similar structure. Have the directional bias in play, focus on those, and take the trades following your risk management, your own trading journal, your own risk to reward, your own money management. So USD CAD, this is what I have here on gold. I have to update it. This is what I had here though. Peak low, 1, 2, 3 peak high. I was looking for a drop. I didn't get any move here as yet. I think I was trying to trade here at a point. I got stopped out. Nothing to cry about though, because risk management is in play. I can never lose unless I am in discipline. Right, Euro USD. So this is what I had. Didn't catch any moves around here. Had the move today. I'm not swinging though. Already closed. So in and out. Euro CHF, where we spoke about that. Right now I'm monitoring this here. Maybe this is now coming off of a second leg. I'm not sure on this anymore, so I'll have to leave this off for now. So sticking to USD CAD, Euro USD, gold. GN. I was looking at GN from this perspective, and I know Jojo has a different perspective on this. Most persons might have a different perspective, right? I think most persons are going bearish on this, but this is my initial markup. I haven't traded this for the week or even last week.
Are we bullish on this? I did a reassessment on this, and I showed it as bullish.
Oh, great.
Right? Yeah, so the buys on them were very, very, very good.
Good. Well, this is what I initially had to. What I'm trying to tell them, Jojo, is like have your plan in play and like have an understanding of why you're looking for a particular thing, and then trade those. Don't worry, fight up about the other peers. Also,
Yeah, that's good application. That's good application. You know, you stay focused. As I said, you know, you use the major time frames to find the directional bias. You look at what phase of the market you're in, right? On the mini cycles on them, on the 4-hour, on the 1-hour, right? And then you just set out and you know what to expect. Whatever phase of the market you're in, there's 3 weekly structures that you should be looking out for. And that's according to where the week open. The week could open up high, it could open down low near a peak, it could open up high near a peak, and you may not see one of the weekly structures play out because of where the week open. You should have an idea, no matter where the week open, what phase of the market you're in. Have you just completed a 1, 2, 3 count, which would have completed a level, but then you expect retracement, you expect contraction. The first 2, 3 days will show you what they are doing. Did they spike up Monday and come back down Tuesday, or did they up Monday and up Tuesday? Right? You got to look at these behaviors. Nice. And you just sit out there and you just wait. Type 1 pattern. You got your money management in place, your PIP percentage plan in place. You know your risk management is inside of your money management. You should already know what you're taking from your total capital, and then use risk management inside of that. And when that's done, walk away. Know when to call it a day. Greed kills all excellent traders, right? Over leveraging kills all trading account. Revenge trading kills all great traders. Nice. So these are things you need to get under control. But yeah, Hilton, definitely good points you're bringing to them. Focus on your stuff. Focus on what you're looking at. Once the dealers show you their hands, let the market show you something. You should, anything you don't understand, leave it alone. Nice. What you understand, accept the risk on it. Continue, brother.
I think that's it. I didn't have a whole lot of peers that I watched today or tried to engage. Just this. I didn't see anything that I liked except the Euro USD. I just wanted to share that that approach that I take. Most people that are successful in the group, that's the approach that they take as well. They don't look at a whole lot of things. So let me see what we have. I see we have some messages here. Okay. Cool. Yeah, so that's it for this session, really, guys. Anybody has any questions, comments?
Good night, brother. Thank you very much for your session. We learned a lot. All right. Thank you. You bring a lot of value to the community and helping and inspiring and encouraging the team. And that's really good. All right.
Hi, Hilton.
Hello.
Hello.
Good night, everyone.
Yeah, do you please have time to analyze GBP CHF, please?
Let me see.
Thank you.
This is our last trading day, but we're in some swings, so we'll leave the swings on them to run. Right, but as you guys can see, while you're doing your thing, Hilton, while you're organizing the chat,
No problem.
start from the bigger time frame so you can do the assessment for her. All right, so you all see we keep it very simple. The charts that I posted at the beginning of the week, we were tracking that from last month, last week coming into this week. So we were following it all the time. Very simple. Just stick to the bias. We saw price retracing up. It didn't show off, of course. It didn't show us off, making us think that the market is going to reverse. We understand the behavior and what they're doing. They use the news. As I tell you guys, the red followers was down on Thursday, Friday. So we know down at that time is when the market makers will really play their hand. They love to use the red followers to play their hand, right? So as you can see, is gold, Euro USD, GBP USD, right? US 30, and there were GBP NZD in there. GBP NZD was taken off the list because I missed a count on that, so that I reassessed it, and then I just take it off the list and left it alone. Nice. And you can see all the US positions, we took 2 trades on, right? 2 positions on, so you don't need to place multiple positions. Sometimes you could use a good lot size and just place 1 or 2, 1 for swing trade, 1 for day trade. You close off 1, and the other 1 you leave it, let it run. All right, so less is more. So you can see it's only about 4 pairs we were focusing on. All the directions went in our favor. So we 100% in profit. No losses, no drawdowns. Well, no losses and stuff. We 100% in profit, and you just want to follow the market like that week into week, and yeah, we can do good. All right, so continue, brother.
Cool. Yeah, so this is what I have. I actually like this structure, so I'm gonna actually add this to my watch list for next week and moving forward. So this is what I am seeing, and I guess is what you're seeing as well, right? That's coming off from a peak high for Batman. Then there's a drop, pull back, drop, pull back. Then there's a third drop. Then there's a peak low. This could be level 1 in accumulation, or possibly level 1 pull back, level 2. But either way, I'm still looking for 1 more, because generally when we get something like this, we expect for the move all the way back up to clear out that liquidity. So yeah, I would be bullish on this from this point.
Okay. I have from peak low, I have level 1 and 2, then into contraction. So I believe, or I think the level 3 is now about to be completed. It's yet to know.
Okay, yeah, great. I am seeing the same thing.
Okay.
Go up on the monthly time frame, Hilton. Quickly, let me see what time we have again. All right, 3 minutes. Yeah.
1 minute, 3 minutes.
So, all right, we're on the monthly. All right, so you're literally down low, right? At a peak low. You can look into these drops here. Right, you're gonna see there's one big drop off the high, there's another one. Good, and there's a sideways movement with a 1, 2, 3 drop. You may not see it clearly as I'm speaking about it, but yeah. Now go on the weekly. Right, so you see this part that's up in front of your face here? That's the peak low right there. Okay, so you can just draw it out. All right, so that's a V bottom. Okay. Now you could draw up your one level of rise from that V bottom straight to where that contraction is. All right, then 2 level of rise, and then 1, 2, 3 down. That's a retracement. 1, 2, 3 down. You see it pull off the high contraction, pull down again, pull back, and then it contract and then spike below that and stop on the down like that. Great. You see how it's gonna close with that big evening star that break that little structure that you see in there. This is an opportunity for a to get in a position for a swing trade straight on that 3rd level.
Okay, thanks.
All right, so you understand what I'm saying now, Selton?
Yeah.
Draw it out there quickly.
I don't think we got enough time, just a couple or a minute.
Yeah, but 1 drop contraction. 1 drop contraction. Nice. 2 drop pull back. 3. So that candle close. On to the next level from there. But look at the structure that it created before it actually spiked down there. So good move for another level up. Measured move. The same length of the 2nd level. Could expect that same length of the 3rd level straight back to where the retracement started up at the high there. So really good. Stay in that direction.
Okay, thanks. Thanks very much.
So let's end the weekend net profit. Let's go, brother. Thank you. We got cut off 1 minute ago.
Night, everybody.
Thanks, Hilton.
Good night.
Good night, everyone.
Good night.